Welcome to ForexTV.com's PM Exchange. It's Tuesday, December 11th. I'm Remy Hoki. Today I'm joined by Corman Tan, currency analyst at MG Financial. Corman joins us after the Fed rate decision to discuss the major currency pairs. Good afternoon, Corman.
Good afternoon, Remy.
Thanks for coming on the show.
It's my pleasure.
Well, today the Fed Reserve cut interest rates, the Fed funds rate by 25 basis points, and also reduced the discount rate by 25 basis points. And following the rate announcement, we saw U.S. equities take a tumble. And as we're nearing the closing bell, the Dow is down triple digits. So if you could first tell us about today's post-FOMC statement, as well as the future outlook for the Fed.
Yeah, sure. I think for the most part, the markets had been expecting a 25 basis point rate cut in the Fed funds rate. However, they were either looking or hoping for more aggressive rate cut or more aggressive language, and the markets received neither of which, and that's why we're seeing this huge sell-off in U.S. equities. As a result of that, we're receiving a large pullback in carry trades. We saw the yen pull back sharply. We fell to 110.60 against the dollar and moved back very sharply. So the biggest fear now is, given the concerns over the credit crunch, whether or not the Fed is being complacent, because they're still remaining heavily focused on inflation in addition to moderating growth. But the statement didn't exactly acknowledge the credit crisis as many hoped it would.
Okay, and Corman, as you mentioned, U.S. equities have taken a tumble, and as a result, we saw the yen surge against both the U.S. currency and the euro. So as we end the close of the New York session and head into the Asian session, if you could give us your ranges for dollar yen as well as euro yen.
I'm looking for the euro yen to actually rebound somewhat, and I'm looking for it to go up to 148.70. Dollar yen, our initial target of 110.60 was reached, so I'm looking for 109.70 over the coming session.
Okay, well, the U.S. dollar may have fallen against the yen, but we saw the dollar surge against the majors, and euro dollar pulled back below 147, and sterling dollar was last at 203.62. Going into the coming session, what's your forecast for the euro and sterling against the dollar?
I think the sterling will continue to remain under pressure. We're seeing last week's Bank of England rate cut, and they're really focusing on economic data from the UK, particularly the weak housing data. So I anticipate the sterling will continue to remain under pressure. My outlook for the sterling is for a near-term pullback to 202.60. Whereas the Eurozone economy may not be as strong as before, as we saw with last night's German ZEW survey, which was weaker than expected. However, the inflation conditions in Europe will permit the ECB to continue tightening rates. So I expect the euro to continue to move higher against the dollar. I'm looking at 148.70. Okay.
And while we're on the topic of central banks, we did have the FOMC today, and we did have the RBA as well as the RBNZ and the ECB and BOE. But this Thursday we have the SNB rate announcement. So if you could give us your take on whether they'll stay on hold or whether they'll move.
I'm actually expecting the SNB to stay on hold, and it's largely an issue of the Swiss franc rate at this point. They don't want to fuel any further inflationary pressure if they cut rates.
And speaking of inflation, now looking ahead on the calendar front, now that we have the FOMC out of the way, we do have PPI and CPI coming out this week, as well as retail sales. What do you think Forex traders should be focusing on in terms of the data front?
I think the inflation numbers will be important, but more importantly will be the retail sales numbers. At this point, we're at the juncture where the primary worry is how resilient the U.S. consumer will remain in light of everything that's happening in the U.S. economy, the housing slowdown, the credit crunch. So retail sales, surprisingly, is expected to move up to 0.6% this month. But I think any downward surprise or any suggestions that moving forward we'll have further weakness either in consumption or consumer confidence, that will really impact the dollar further.
Okay, and I want to move on to the so-called commodity currencies of the Aussie and Kiwi before we touch on the CAD. The U.S. dollar recovered from previous session losses against the Aussie, and the U.S. dollar also gained against the Kiwi currency.
Right.
But given our rate differentials as we stand right now, what's your forecast for Aussie and Kiwi?
I think the big move for the commodity currencies recently has been as a result of the yen pullback. As we saw today, immediately after the FOMC meeting, we saw a sharp pullback in the yen crosses, which pulled back Aussie yen as well. However, I do feel that the yield differentials will continue to play a key role. So for the Aussie, I'm expecting that to appreciate to 90.75. And moving forward, I think more importantly will be growth outlook. And the Australian economy is much more resilient than the U.S. economy at this point. So that should benefit the Australian dollar.
Okay, and moving on to dollar CAD. Before the announcement, dollar CAD was at 1.0047 and was back up to 1.0160.
Right.
So going into the coming session, what do you expect to see for dollar CAD?
There was a lot of volatility in the dollar-Canadian pair after the meeting. I expect the Canadian to actually recover somewhat against the U.S. dollar. Over the coming session, I think we could pull back to the one figure.
Okay, and last but not least, before we wrap it up, now that we're nearing the year end and many institutions are giving their forecasts for the major currencies going into '08, what do you think Forex traders need to pay attention to, both in terms of technicals and fundamentals?
I think in terms of Forex traders, they really need to focus on growth differentials in addition to interest rate differentials. In large part, we're seeing the dollar rebound somewhat as a result of Bank of England cutting rates, as a result of other central banks becoming much more wary of credit conditions. Now, once once it becomes clear that the U.S. economic slowdown impacts other major economies, then we might see rebound in the dollar, and that would be much more so as a result of the other currencies' weaknesses. So I think that's a major issue to focus on, how the U.S. growth rate will impact the global growth rate.
Okay, Corman, as always, thank you very much for coming on the show.
It was my pleasure.
This has been your Forex News with Corman Tan from MG Financial. Next up, we have your equities and commodities wrap-up for the day. U.S. stocks plunged following the rate cut by the FOMC this afternoon. After trading mostly flat throughout the session, the major indexes tumbled over 2% on the day. Today, the Fed Reserve cut both the Fed funds rate and the discount rate by 25 basis points. The Fed funds rate now stands at 4.25%, while the discount rate is at 4.75%. At the closing bell, the Dow fell 294.26 points, ending at 13,432.77. The tech-heavy Nasdaq fell 66.6, ending at 2,652.35, while the S&P 500 declined 38.31, ending at 1,477.65. In the fixed income market, U.S. Treasury bonds rallied after the Fed Reserve rate cut. The 10-year Treasury note surged with its yield at 4%, down from 4.16% late Monday. The 30-year bond also rallied with its yield at 4.49%, down from 4.62% yesterday. And the 2-year note gained with the yield at 2.97%, down from 3.18% on Monday. In energy, NYMEX crude oil futures gained 2.5% above $90 a barrel. January crude added $2.16, ending the regular session at $90.02 a barrel. Crude futures hit an intraday high of $90.55. Elsewhere on the NYMEX, January reformulated gas rose 4.13 cents to $2.29.14 a gallon. January heating oil gained 4.54 cents, closing at $2.30 a gallon. The market now awaits tomorrow's EIA and API petroleum supply data. And meanwhile, January natural gas futures added 8.5 cents, closing at $7.0117 per million BTU. Over in the metals complex, gold futures declined after the regular session. The Fed rate cut came following the close of the NYMEX, and the precious metals took a hit as the U.S. dollar traded higher against the high-yielding currencies. February gold fell under $800 an ounce in aftermarket electronic trade after settling at $817.10 in the regular session. Meanwhile, March silver gained 1.5 cents, ending the regular session at $14.0865 an ounce. In electronic post-FOMC trade, silver was down at $14.0725 an ounce. This afternoon, I'm joined by Bobby Firestone, analyst at Aileron Trading. He'll give us his short-term outlook for commodities futures.
Well, happy Fed Day, everyone. Just had some exciting trading in the last couple hours of the day. Now, we're going to kick off with, since it's Fed Day, inflation. Gold slid from the Fed coming out. Traditionally speaking, you'd expect to see Fed rate cut, gold to go higher on the idea that they aren't going to be defending against inflation. contrary to popular opinion, well, the entire quarter point has been baked in for the last week, and it's been getting supported. So going into it, everyone knew what was going to happen and trade accordingly, so it had nowhere to go but down. Secondly, the Fed statements for being on cut number 3 in 4 months were actually rather moderate. They weren't swinging to the idea that they're going to be making further cuts in the future, moderate growth. So if they stay as is, gold has a chance to kind of find some support and just really churn back and forth until we get a clear picture on where the economy stands. Over in the energies, well, what can you say other than it's range bound? We're seeing the market sell when it gets 90 or 91. We're seeing buyers come in 85, 86, 87. So we have to look forward to inventory reports. Inventory reports on last week was a big surprise. This week, I'd be shocked if we saw another inventory report surprise. But hey, you never know with the inventory reports. So keep an eye out there. Otherwise, just look to see it continue to stabilize and try and identify the top and the bottom of this range.
That was Bobby Firestone, analyst at Elron Trading, with his commodities commentary. And that's it for today's edition of PM Exchange. I'm Remy Hokie. Join us tomorrow morning for your latest news update right here on ForexTV.com. Have a good night.